So, Johnny, another topic that readers of Digital Bytes have asked for more thoughts and insight on is ESG and the role blockchains can play.
Yeah, well, indeed, more attention is being paid by asset managers on environmental, social, and corporate governance, i.e., ESG. And indeed, the fund rating service MSCI has recently been publishing its ESG ratings on companies, which help fund managers in their stock selection and portfolio construction. And it's interesting that the National Employment Savings Trust, NEST, which was established back in 2011, with over 9 billion of assets and 9 million investors. And there were some interesting things that stood out on their latest fact sheets, their updates. And one was, there was a big section on responsible investing. Secondly, the ethical fund over 5 years has outperformed their high risk fund, and actually with less volatility, i.e. less zig and zag. And finally, the equity funds themselves have very, very similar holdings in their top holdings, such as Microsoft, Apple, Google, Alphabet, and Facebook. Thus, it does beg the question, how diversified is an investor that wants to have exposure to a selection of Nest funds? But by using a smart contract, it'd be very easy to report to the asset managers and to the underlying investors on the geographic or stocks exposure so that they can see this sort of concentration for themselves. Because I suggest that most investors don't realise how much exposure they have to literally a handful of stocks. So what we're seeing is blockchain can actually help with ESG reporting. So that it's much more consistent and standardised and effective. And as Forbes recently pointed out, this is maybe the first time that we're seeing technology and sustainability not historically have gone hand in hand, but because of the rise of interest in blockchain technology and the demand for ESG investing, maybe we've got an opportunity for a change that's going to be for the better for investors and for society as a whole.